Good morning, everybody. We have a higher trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. December corn futures up 3.5 cents at 426. January soybeans up 12.5 at 1190. December Chicago wheat up 3 cents at 594 and 3/4. December Kansas City wheat up 1.5 at 550 and a quarter. December spring wheat up 1 at 547 and a quarter. So very strong trade in the row crop markets here again. Nearby December corn testing these recent highs. January soybeans actually posted a fresh high overnight. Soybean sales, export sales are weakening a little bit. Last week's sales of 1.387 million metric tons were a marketing year low, and the previous marketing year low was just the week prior. So we've backed off in terms of weekly sales the last couple of weeks. China accounted for 76% of what was sold on the export market last week, so China's still an aggressive buyer here. Now, overall, commitments for the marketing year are still record high for soybeans. They exceed the previous record from 2016, I think, by 31%. So we've still got an incredible looking book of soybean export sales here, but we have seen weekly sales back off here over the last couple of weeks. USDA has not reported a flash sale of corn or soybeans to China this week. The last flash sale we saw, I think, was a sale of soybeans on November 6th, so going back 2 or 3 weeks. There's been a lot of trade chatter suggesting that China would be back for more corn and more soybeans. We just haven't seen that confirmation yet. Perhaps it'll be today at 8 a.m. Central Time. That's when the flash sales are reported. We saw a small corn sale to an unknown destination on Wednesday morning. Soybean planting in Argentina is moving faster following recent rains. After an improvement in rainfall, soybean planting regained momentum. That's what the Grain Exchange in Argentina said in a report. They estimated that 28.8% of the country's 42.5 million acres have been planted. That's a pace that's about 2.5% behind last year. Corn planting in Argentina, 31% complete. That's 14% behind last year's pace. A lot of weather forecasters continue to discuss the possibility of this year's La Nina event bringing widespread dryness to South America, and we'll see if this comes to fruition or not. Perhaps La Nina is responsible for some of the early season dryness that we saw, but I don't think either country is in terrible shape right now. Brazil has caught some rain. There's some more rain in the extended forecast for Brazil. I think a lot of people still working with the idea that Brazil will have a record bean crop this year. China is likely to remain an importer of pork for 4 to 5 years. The head of Danish Crown, they're Europe's largest pork producer, said that China will remain a large importer of pork because new African swine fever outbreaks continue to essentially hinder the rebuilding effort in China regarding the hog herd. And this, of course, directly influences, demand for products like soybeans, soybean meal, corn, wheat, feed products. So it's definitely something to keep an eye on. December grain options expire today. Be sure to examine any remaining open positions that you have. That's a big option expiration, and boy, did that come up fast. A couple of notes on global soybean pricing. So I had a chart in my newsletter this morning regarding global export prices in soybeans, the United States versus Brazil, beginning with January and February of next year. And the dynamic here is this. For the moment, U.S. soybeans are the only game in town. Supplies in Brazil have been exhausted for some time. If any global buyer needs beans between now and February, that business is coming to the United States if they need it shipped in that time frame. The pricing structure and the supply structure will change very drastically beginning in February when these new crop Brazilian beans become available. As a matter of fact, there are already markets, export markets, and pricing for Brazilian beans and U.S. beans beginning in February, going out through March and through April. And what these prices show us is this. U.S. beans will become non-competitive on the export market in February. They'll become even less competitive in March and even less competitive in April. So this is something that we have to prepare for, and this is not anything new. This is not a big change in the dynamic or anything. We've known for a while that once this Brazil crop comes online and once it's available, it's going to be cheaper for China to buy beans out of Brazil. But I figured I would just kind of run through that pricing structure real quickly. For the moment, really from now until that first batch of Brazilian beans becomes available, U.S. is the only game in town. After that, the dynamic changes, and it changes very, very quickly. Corn markets acted well. Again, we almost posted fresh contract highs in the nearby December contract overnight. Fears regarding additional shutdowns, COVID, reduced demand via the ethanol industry, they have not really impacted this market at all. The market appears to be discounting an even stronger export program, I think, or perhaps maybe a lighter U.S. crop. I mean, it's not, you know, historically a big thing that USDA would make a big adjustment to the crop after October or November, but they made a big adjustment in November this year, and I guess there's nothing to say that they couldn't do it again, but I think the export deal is probably the bigger thing. Carrying the corn market, still a lot to be desired there. 5 3/4 cents from D's to March this morning. Soybean market, again, acting incredibly well. It's fairly obvious that demand is not being reduced very much despite this big surge in prices. Crush is as strong as ever. Export sales have backed off a little bit, but remain very good overall. So really, like I said, U.S. is the only game in town here till about February. The wheat market is acting well, and it appears to me as if large speculators have kind of been drawn into the wheat market because we have such a strong trade in the corn market and in the soybean market. But demand for U.S. wheat is just flat out terrible. Export sales last week were a marketing year low, 193,000 metric tons. That poor sales pace may very well continue if these sort of higher prices remain intact. Eastern areas of HRW wheat country here in the U.S. should see some rain this week. Western areas going to kind of stay on the drier side. Your SRW areas in the Midwest are going to see plenty of rain over the next couple of weeks. No issue there. You may see some improvement in crop conditions. Cattle market got beat up yesterday. We were down $2.50 in some of these fat cattle contracts, down almost $2 in a lot of the feeder cattle contracts. Hog market also got hit hard. Cash cattle was kind of scattered. 106 to 110 yesterday. We'll see what develops here today. We have a cattle on feed report after the close, so be prepared for a little bit of volatility early next week, perhaps. Stock market's pretty quiet ahead of the cash open. The Dow Jones is down 26 points. The S&P is about unchanged. U.S. dollar is up a little bit. Bonds are up a little bit. Crude oil is up 26 cents, 42.16 in the January WTI. Precious metals very quiet, also floating around unchanged. If you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you would like to know when, how, and specifically I'm pricing corn, soybeans, and wheat throughout the year, check out that subscription service. It's $49 a month. Billed to your credit card. You can cancel it at absolutely any time. No obligation, no other fees, no trading account needed. Everyone have a wonderful weekend. I will talk to you on Monday.